Okay, this is the third in a series of matrix utilization Q&As on how to use the spreadsheet. So I'm going to just go over a couple of my comments this morning in the AM look. Do I have everybody on this? Yeah, okay. So the low last night, it went right down to the matrix level and held in the NASDAQ. It's 75.90. And that's the downside target that's Matt's been looking for all week in the NASDAQ. And it went down there at night. So it doesn't really matter when it goes there. If you're trading futures, you just want to trade the level, okay? And we didn't really have much on the matrix sheet in the S&Ps, other than the fact that we were looking at this 2883 level, and we knew the 60s and 70s have been just, one of those 50% levels up and down where it's tortured everybody. But the most important thing was that it filled out the 50 by 3 on the point and figure before it turned back up again. So, the name of the game in this is matching up the matrix levels in as many markets as you can. All right, so I'm going to open this up to anybody that's got a question on how to use the number sets and how I view them. I know we've gone over it before, but hopefully you guys have, listened to the first couple of matrix recordings. So, I'm just going to put the floor out to you guys for questions.
Judd, I've got one.
Okay.
When the item kisses a matrix level overnight, have you found that even if it does it overnight in the thinnest part of the night, whatever it may be, once it does it, it's done?
Yeah. I mean, look at here, let's look at this low in August at 28. We got a matrix level at what, 2811 or 2812 in the S&Ps? 2811 on the sheet. It went right down there matching the 200 day that night. It was in the first 30 minutes of Asian trade, the thinnest part of the night. It went down there. It doesn't matter. It's good. It's going the other way. And here again, last night, early again, it did it. So let's just go back to one other thing. One of my other rules, which is midweek shuffle Wednesday rule. Okay. What's the rule on Wednesday?
Don't chase highs.
Right. So we closed. Yesterday was a big rally day. Okay. And if you're trading futures, the last thing you want to do is go home long on that, because 90% of the time you're going to get a better entry. It's kind of rare that it gaps up. And even if it gaps up, it generally gives you, within a day or two, a retrace to trade at that high again or that level, okay? So that's why I never chase those Wednesday extremes, whether it be up or down. You don't want to chase that close. It's pretty rare that you want to go with the close, especially if you're a futures trader. And last night was a really good example because, it gave you a shot in the S&Ps, 40 handles lower. It gave you, the same thing here. It gave you an entry at the matrix level again before it came back up. So even if you got out, okay, you still could get back in where you got out. So that's why, I never chase those Wednesday, Thursday dances. It's a midweek shuffle. It's, it's generally a fake out if everybody's trying to do it. So if you're a futures trader, you're always better off just holding your water and waiting. And if you want to be long, you're going to get a lower entry.
So what you're saying is, if we make believe that last night's volatility never happened, right? Just simply because of all the trade bullshit. So let's set that aside as an extenuating circumstance. You could have gotten back in this morning at the pit open, and you would have been just fine.
Yeah, I mean, the pit open closed, you know, the pit opened at 76.96 and a half in the NASDAQ. So here, let's just look at a pit chart. If you went home flat on a Wednesday, on an up day, on an up Wednesday, were you missing anything? Nothing. You got back in, you were able to reload this morning with no heat overnight. And if you wanted to buy them, you know, you had the number, it's, you know, it's on the sheet. It went right down there and held and took off. So anytime you get something like that, when it's really thin, you have the number in front of you. That's the beauty of the sheet. Markets have memory. It's on the sheet. You know where it is. And if you want to take a shot down there, you can put a stop in, and you know where you're wrong. That's the beauty of it. Okay. Anybody else? Or Angela, you want to follow up on that?
No, I'm fine.
Okay. And it's the same thing here in the S&Ps. I mean, the S&Ps came down and filled out the point and figure. You know, you could have bought them a lot lower last night. You know, if you're bullish. Okay, so Andrew, there's a couple of good questions. Okay, so how do you treat the previous third quarter level? Okay, so matrix levels go from one number to the next, okay? So this quarter, we got a matrix level up here, okay? What it does is at first it goes down to the next matrix level, which was 51 and a half, right? Then it rallied. Then it went down to, you know, tried to go print 44. Then it rallied. Then it printed 44. You know, it went through it. Then it tried to rally again. Then it started coming down into those 50% levels before it started to rally again. So it always tries to go back to the next number set. Okay? So this morning, here, well, let's look at the NASDAQ, okay? Because Matt Matt got on and he said, okay, what's my trailing stop in the NASDAQ? All right. So the ORH high today in the all session is what? Is 32, right? And you got a matrix level at 26. So where do you think your trailing stop's going to be, Andrew? And the quarterly pivots on here are matrix levels on the sheet, okay?
They're just from prior periods.
Yeah, it's just whatever time frame it was in, but it's just matrix levels never go away. Targets change, but the matrix levels never do. They're always there. They're there from 20 years ago, from 40 years ago. In the pounds, they were there from if you look at the sheet and the pound numbers, they were from 1985. Here, you can unmute yourself, Andrew, and ask the question if you want, so I can fully understand what you're asking.
Can you hear me?
Remember, matrix levels are closing numbers.
Can you hear me?
Yeah, I can hear you.
Oh, cool. Hi, Jed. Yeah, so essentially for that NASDAQ one you were talking about, you're saying that it got down to 32 and the third quarterly pivot was 26. So obviously you want to have your stop comfortably below 26. Is that right?
Well, right now, yeah. If you wanted a trailing stop, you'd want to use it below 77.26. Now, it just tried to get 50%. I like these 50% numbers, okay?
Mm-hmm.
Because in the S&Ps at those old 50% levels and the 2860s, we're good again on this time down. Now on the way up, 77, or what is it? 78.21, I think, is the 50% in the NASDAQ coming back up between the numbers. So if you look at the quarterly pivot, right, at 79.17 and a half and 77.26, what's the half of that? It's like 78.20. So they're trying to come up there and get those, but then it's a time frame trade if it's actually going to go print them. And the same thing here in the S&Ps. We know that 51 to 53.75 is going to be a brutal level. So Matt just took profit at 44. It's on the sheet. He didn't have to think about it. Langer came up and told us that he had, a 48 momentum line that it's just rejected at. Okay. So that's how we line that stuff up.
Okay, so the quarterly pivot, third quarterly pivot, the 77.26 becomes a matrix level that we use going forward.
All right, what are you looking at? 77.26 in the NASDAQ? Is that what we're talking about?
Yeah, which was the third quarter pivot.
Right.
Yeah.
And now it's this quarter's first support.
Okay, cool. So essentially the second part of my question, the quarterly pivots behave in the same way as matrix levels. So if we've got the fourth quarterly pivot at the moment.
Well, that is a matrix level.
That is in itself a matrix level too. Okay.
Yeah.
Great, thank you.
So whatever it does below the quarterly pivot, it can do above the quarterly pivot. So there's no upside until you start seeing closes above those numbers.
Mm-hmm.
In the meantime, you just got to treat this as a big range and an opportunistic trading environment.
So in the S&P or the SPOs, you've got quite a big gap between 28.11, I think, and 29.42. And what you're really looking for is that 50% level.
Yeah, so it came in, we've noted at anywhere between 66 and 77. We've on the way up and on the way down. When we came down here and bottomed in August, mm-hmm. and when we bottomed again in August, every time we came back into that 50% level, trading got really hard. So we know that 50% level is just a level that on the way down, you don't want to press into it and you're looking to take some money off the table. And on the way up, going this way or this way up into it, that you wanted to take some money off the table and not, chase strength. It's just a level not to overtrade. Mm. And a lot of times, it's funny how it works, but the 50% levels and these matrix levels really work well.
Okay, great. Thank you.
Well, now, Danny, I don't like splitting them that much, but you can. I mean, I just don't like doing that. I think what happens is if you start splitting it, that when you're actually trading, you have too many numbers in front of you. And when you're trading, your bigger trades and your bigger money trades are going to come off matrix levels and matrix to matrix swings. And those are your highest probability swings. And I'll show you another one. All right, here's the euro, right? You know, the euro did nothing but, you know, go from one matrix level up here at 111, back down to 110.07 here. Never really closed above it. And when it started closing below 110.07, then, you know, it started another leg down. So, you know, I like looking at it. Yeah, that's how I view it. Okay, Leaf, you're asking another a good question here. The more of these things that line up, the bigger the trade. So let's just take a look at this. Okay. Let me pull up a bond chart. What day was that? August 26th. All right, the bonds on August 26th went up to 165.19. And that was a 50% number between the two matrix levels, right? You had 163.15 and 167.15. So you had that was a 50% high in the bonds as the stocks were holding down here at 28.12. So you're going to get the inverse. The more of these line up, the bigger the turn. All right, let's see what the gold was doing that day. And when you're looking at the gold chart, you always have to look at a daily, active daily, okay? So that high was 1565 in the gold. And I'm not sure. I think that showed up on the point and figure somewhere. Yeah, here, hold on. Let me pull this over for you. On the 100 by 3, you know, it double topped up here at this 1560 level. So you can see until we start closing above, you know, this 1542 to 45 level, you don't have a confirmed upside breakout in the gold. So the more of these number sets, and you're right, Leaf, to look at it that way, the more of these numbers that line up at the same time, the bigger the turn. So typically the bonds will line up, the S&Ps, the NASDAQ, the metals, it'll all line up at the same time. Even today's gold, okay? We needed on that point and figure above a quarter to get going. And last night's high was 2230. So we went right up into that zone and stopped again. So they'll all line up. And so, David, for you, when you're adding or subtracting risk, you want to do it off these matrix levels. And if you don't get closing matrix confirmation, you don't want to go chase stuff. Okay, anybody else have anything that you'd like to ask about how to use the number sets? You know, I'll do these from time to time, you know, because, you know, I like the interaction and the questions you guys ask. If you unmute yourself and ask the question, it only helps everybody else.
So Jed, for a 1 to 6 month time frame, it wouldn't be a buy and hold until we get 2 closes over 30.13 in the S&Ps, right?
Right. I just think it's a big range trade. And I still need NASDAQ bonds back over 50 before I get bullish. So let me just throw that up for you. You know, the quarterly doesn't look bad, you know, coming back into the averages here, okay? And I use the pit session on this because it goes back farther. So if you want to use these, and David, this is kind of for you, you can put up QQQ TLT spread or a SPY TLT spread. They don't go back as far, but it gives you a sense of what's going on. Okay, so there's that 50 level, okay? And this level has been running, you know, I don't know, we're in a 9, 10, 11, 700 point NASDAQ swings off 50 in the spread. So it is another one of these numbers that just is not going away. And we'll look at the SPU bonds, you know, and that's why you got to use the pit in this stuff. You know, on the quarterly, I need above 186.80 for the spread to turn up. So all these rallies that you're getting in the indices aren't getting high enough for me. So which one's wrong? Is it the SPU bond spread, or is it the index themselves? So when I just say trade it from level to level, that's the smartest way to play it, because you're not getting confirmation from the long-term spreads. All right, so let's go back to 2000. Here, let's try to get a little longer time frame on that. So if you're looking at the S&P bonds, the only time we came back to the averages was in December 2018. When we put the ORL semi-annual in, and we came right down to the averages that the last Wednesday of December, when Matt got out of his shorts and we turned around and went back the other way. So I like to take a look at these long-term risk spreads, make your decisions at the matrix levels for trading, and opportunistic short-term risk on, risk off, and then not lose sight of the bigger picture stuff. And I use the Pitt S&Ps because they go back to 1982. The bond Pitt goes back to 1976 or 1977. If we put up a SPY TLT chart, you know, it's only going back to 2002. You know, I don't want to make my decisions off of this chart. There's not enough data. I mean, although if you look at it, I mean, look at this low that it took off from, and that was, this is a semi-annual. That was the October breakout, the first week in October in 2017. And you can see how it came back in 2018, and again, and then again, you know, this year. So you have two things you want to do. You want to look at the matrix levels, you want to look at the risk spreads, and that's how you determine what you want to do. And that's when I say, you know, you have to decide how you want to, you know, I don't think that, I think it's a trading market, not an investment market. And I think it's going to be a really good opportunistic trade. But when you make 5, 10% in a name, or some of these names or even more, then you have to have a trailing stop in and just treat it like that. Yeah, well, excuse me, you don't ever want to throw those old sheets out. You know, I've got my sheets going back forever. You know, and markets tend to do that. And those levels just, you know, never really go away. So it's good on you for keeping your eye on it. Well, David, we had this conversation the other day. And you know, for you, I like 2 closes, okay? But part of that is the art of trading if it's just going to go. And that's what Matt's really good about, because if he sees they're just going to go, he's just going to get on it. But generally, you know, all you have to do is ask me, because a lot of that is condition of the market. You know, how far the market has traveled to the number set. You know, if it's traveled a long way down to the number set, you're looking at price rejection coming back up or coming down to it. So let's just go look at the NASDAQ for drill today. Hold on, let me get all these lines off. Well, right now, see what it looked like last night. And you almost have to look at an hourly RSI on this stuff. You know, on the hourlies last night, it was down around, it was, you know, in the oversold territory, but not massively oversold. But it's really, you know, that's an esoteric conversation about the condition of the market and how far it's traveled to one of these numbers. The longer the distance to one of these number sets, the stronger the bounce. I mean, that's about as, this one. Oh, I think, when was it? Well, 2017, it was an investment all the way through all the way up to the third quarter last year, when it went up to hold on. You know, 2965 was that old target that I put out in 2017. Okay. So it went up to, the 1st of October, 2944, double top, boom. So if you're just trading the matrix levels, you're supposed to be out there. And this went down into the end of December. And I think it was, Matt and I were on the horn talking. It was something about the Mexican peso and just the matches at a lot of different levels that had me looking for a low. And that's when I wrote the last week in December that if you were an RIA and you wanted to buy and beat the rush, you did it then before the first of the year buying. You do it at the, at the thinnest part in holiday trading when everything's oversold. And then you had another trade all the way back up into this quarter, into September, October again. And that's when Ira started getting bearish. God, when did he get bearish? I'll tell you, give you the date right now. Because that's when we started selling. It was
I think
the
at this point, it was 3 weeks ago.
It was September 18th. He sent me a note saying, I'm short for the first time in forever. And that's when Matt and I started selling them and I started buying puts. And I bought puts. I don't know if it was Wednesday or Thursday or whatever it was. And the NASDAQ was 40 handles higher at night and opened 60 handles lower in the morning. When he starts seeing stuff like that and he's looking at it from a fundamental basis, I'm all over it. I'm going to give it a go, period. And I think, as I recall, you said that you were lightening up all your risk. Now the question is, you're going to get these tradable lows. I don't think they can sustain a rally to anywhere. And you're going to get these really big trades in a lot of names, but I think you have to trade to make money and just and take the money when they show it to you. Yeah, now we're coming right back to the ORH number in in the S&Ps, which is 34.25. Well, great. Is it going to hold there? Or is it not going to hold there? I don't have a good sense of it. Yeah, exactly, David. And when Ira was in the room that Wednesday or that week, and we had one of our webinars with him, I was looking at the first week of October for the high and then break. And we broke early. We had a 150 handle break. We came all the way back up into the 1st of October and we broke again. So those are, yeah, when was this? Yeah, quad witching. Right after quad witching, we had the ORL, which was what? That was, 78, almost 80 points down, came all the way back up to the averages. And what tipped us off that day and where Matt sold them, and I'm going to show you right now. It was this day, October 1st, when the NASDAQ bonds went right back to the 200-day moving average, and he sold them again. He sold the NASDAQ. It's a brilliant trade. So you take the equity bond spreads and the matrix levels, and you combine them. And you know what not to do and what to do. They're very revealing as to whether you're supposed to be selling them before you buy them, which was another huge move in the spread for 300 points. Leaf, the currencies have been more of a lagging indicator trading off the bonds, the interest rate differentials lately. But if you go back in time and look at any of the major turns in the market, you'll excuse me a second. You'll typically see the currencies line up with the bonds. I think on the election when Trump got elected, and we were at that extreme election eve when the S&Ps were limit down. That was a matrix level in the S&Ps, a matrix level in the NASDAQ. It was a high in the gold. I can't remember what number it was, and it was a spike high in the. I don't know if it was but it was and the bonds hit a big number at the same time. So you had the S&Ps and NASDAQ, you had a bond high, you had a gold high. They all hit at the same time. So the more of those numbers that line up at the same time, you just have to get used to looking at them because they'll start to all line up at the same time at these market turns. And that's what you're looking for. You're looking for that cue. And the more of them that hit, the bigger the turn.
You'll get those big matches a few times a year, 2, 3, 4 times a year, right?
Oh, you had more. You had 4 or 5 in October or September. In the October or the August, August, September, during that volatility, I think you had 4 or 5 matches for huge trades for 100, 150 handles. Now, and this is something that Pax and I are going to ask at this thing with TT that we're going to with Santelli. Or with Credelli. This goes to your market IQ, guys. What is the average deviation, standard deviation move in the S&Ps? Type it in, speak it out, whatever you want. But whatever you think the big standard deviation move is, or an average standard deviation move is in the S&Ps. No takers?
No, I know it, but I'm not going to say it.
There you go, Lars. You got it. It's 80 to 120 points. It takes 96 handles to turn the 100 by 3 point and figure in the S&Ps. And I'm going to put that back up here. Right there. This takes 96 handles to turn. Well, Andrew, a lot of times are you talking about the gold, you're talking about the oil, or you're talking about the softs?
I guess all of them in a certain respect, but I mean, you've obviously got the precious metals if you're categorizing them, and then probably the more industrial types. So
Right.
are you looking for the precious ones against the bonds, and then the more industrial ones like oil or whatever come off? I mean, what do you use to measure sort of each one in terms of how it behaves around the matrix level?
Well, I think, for me, I just, right now, I'm just looking at the oil as a big range trade.
Hmm.
And
Because sometimes it follows the SPOOs, and sometimes it kind of goes off on its own.
yeah, so let's see here. But you'll see these things line up risk on, risk off. All right, so here's the crude. There's a quarterly. There's the 2008 oil spike, okay? This is a big flag formation waiting to do something. Now, how long we stay in this triangle is anybody's guess. I think that, between Putin and the Saudis, they want to keep it in this triangle. They don't want it to break out to the downside and have everybody start selling this thing. So I think through production cuts and everything else, they're going to try to keep it in here in this range for a while. But at some point, it's going to break out. And when it does, it's going to go big. But think about it, this is a quarterly. It could go sideways for a year before it breaks out, maybe longer. So back to your question is that, if you're looking at the grains, they go from one level to the next. The gold and silver, I'm just looking at, and this is how Angelo is trading it too, is matrix to matrix. And then I'm waiting for the currency. Let me go to this other thing here. The currency metal spreads to tell me when I can get away with a shorter term trade. So let me just put this up again so you can see it. Tuesday, I was talking about silver yuan, right? And I thought that the silver was the better trade, the better thing to be long. Angelo still had some gold on, and he told somebody who was asking about it in the room. He said, well, why don't you just buy some of both? And let this build for a couple of minutes so you can see it. I mean, when Ira was searching for the Branch Davidians when he was driving around Texas, here, let me get this up. All right, it's going to take a couple of minutes for this to build because it has to pull a lot of data.
I'm sorry, I was on a phone calling back.
That's all right.
So essentially, when you're looking at the currency to a commodity, you're seeing what behaviors are you looking for, and which currency in particular is hitting what levels.
silver yuan, okay?
hmm
This is when I started seeing it earlier in the day on the 8th, looking like it wanted to put an ORH day in and start squeezing about its 50. That's when I said you can be long the silver, okay? And the silver popped what, 30 cents that night? Into the ninth? So it gave you a nice trade, and I did it off of silver yuan and silver in yuan and silver in euro. So both of these currency spreads, you know, the gold and, you know, the people in the US are happy, okay? They're happy with Humpty Dumpty right now. So they're not the ones buying the gold and the silver, except the hedge fund guys who look at the world a different way, okay? But the demand's been coming from China because they've been buying the most amount of metals. So let's look at, you know, the gold in yuan on the 8th didn't look as good. And now today you got a total breakdown in it, but you know, it's going to remain to see if this goes anywhere tomorrow. And this day, on the 1st of August, is when I went to Europe and I bought the gold because of the breakout against the yuan. And the euro, okay? So I wait for these to see the confirmation in them that they're ready to go, because I want to see the demand from offshore. I don't want to see it in dollar terms. I want the confirmation in either euro or yuan that it's going. And then I'll look at the matrix levels and I'll go with it. And you can see here, gold and euro in euros today, you know, you get it's totally broken down. So this is going to take a while before, you know, I'm going to get comfortable being long the gold again on for a long on a short-term trigger. Okay. All right. You follow that, Andrew?
Yeah. So if we hit the next matrix level down in gold, you'll be looking at essentially yuan and perhaps euros to see where a level of support is.
Right. You know, if you're
Okay.
trading it, you know, if you look at the sheet, the number in green was an old 50% level. Okay. And Angelo had a great trade. He bought them there. At the time when he bought them, you weren't getting the trigger in the golden euros or the golden yuan. He just had a macro view that he wanted to be long gold. He hadn't been in it. It was a good spot. He knew where he was wrong. And, you know, the next day it rallied $50 out of there. So, you know, and Pax will tell you too, he doesn't trade the gold in the opening range breakouts. He's only looking at the matrix levels in there to trade it. And he's relying on me to spend enough time looking at the gold currency and silver currency spreads for the triggers. So, I mean, that just allows me to be out of the trades, you know, sometimes for weeks. And then, you know, I'll get a trigger off of one of these currency spreads and to tell me that it's time to, you know, that it's, you know, the timing's right. So I use these more as a timing tool than anything.
Great. Thank you.
You're welcome. Peter, yeah, yeah, exactly, Leaf. That was a total risk-off event. Um, Peter, you know, that kind of gets tough sometimes. One, the wiggle on the Nasdaq's 8 to 12 points. Okay, so you got to give, and first and foremost, matrix levels are closing levels. Okay, now you can lead off on them during the day. You know, if you're, and I know that you and Pax and a lot of guys are really good, and you're able to do that. And some guys can't, and some guys can. But I wouldn't, you know, the gold, I wouldn't give it more than $2.50. Currencies, 25 ticks, yen 30 ticks, S&Ps, $25. Or, I mean, $2.50. You have to use, you know, the wiggle on the Nasdaq's 8 to 14 handles. The bonds, you can usually use a 6-tick stop. I think Langer uses 8. But again, you know, you're using it as a closing level. So when you're looking at, when you're doing your homework, okay, let's see here. Yeah, I mean, you know, you have a big day up in copper today. You know, these two lows in August were, you know, they spiked, this one came right down, they spiked the matrix levels and never closed below them. So that gets into, and this just for example, that's the art of trading, okay? And even down there, I wouldn't have bought the copper with anybody's money because I just didn't believe it. You know, and I think the copper's been a bigger trade against the gold and the silver than it has in anything else. And today, the strength you're seeing in the copper is the ORL in gold copper, which is a big topping pattern, and the same thing in the silver copper. Which is basically says risk on. So you have to do your homework when you're using this stuff and see how everything lines up with it. All right, well, anybody else have any other questions? More than happy to answer them. We're here. You know, just remember, you know, markets are interrelated. You know, the bonds didn't quite get down to the quarterly pivot today. You know, but the opening range today in the futures in the bond pit was, you know, right around a matrix level of 163.15. And once they started going below it, they just kept on going. But you always have to take a look around and see where the numbers are. You know, take a look at your charts. You have 162.12 is where it broke out to the upside from. They got the stops under 162.12. You know where the next level is, which is, you know, 161.07. I don't think you can get down there today, but, you know, we'd have to go risk on. You know, we'd have to get for sure up into the 50s to see that.
Well, Jed, my process likes bonds and gold on sale, so I nibbled a little bit right here on bonds. Well, just a little.
Yeah, well, it's
I
good
mean,
places there.
I know where I am, and I know where I'll get out.
Yeah, and so you have a pattern here in the, all this is sell-off now is coming back in. You had a double top up here. You had the stops were 165, 106 or 07. And I think they went up there and just double topped, or they went up there and they gave you one tick above it. Yeah, here. It was 165.04 and they went up to 06 and then rolled over. And then they went up and double topped and came down. So, now you just got to see how this plays out. All right, so this is for you guys that, are looking at your sheets, you're trying to understand it. This is a really good time to ask questions. There's a lot of things moving around. Danny, you got any questions? All right, guys. Well, if you have no more questions, then I'll end the class. And anytime you guys, during the day or whatever, and you want, you're trying to figure this out, you got to ask. Ira says it all the time. You have to ask. Just don't be blindly listening to me in the room. If you want to understand, ask. More than happy to appreciate how I'm looking at, what I'm looking at, and how I'm putting the board together. And it's really important for you to, as your growth as a trader, to understand that. And the more and deeper you understand it, you'll start looking at different things and just going, that makes no sense. And you'll either enter or exit a market. And some days you just don't know. I mean, Matt and I have conversations. It's like, well, the price action doesn't make any sense to me. I'm keeping my mouth shut. It's not evident every single day. All right, guys. Well, you're most welcome. And, you still have a risk on day. The S&Ps just went down and held again. At today's ORH number. Hold on, we're going to go to the other screen. And this last low just came down to 34.25. There, where are we? And went down to 33.5. 34.25 is the daily ORH number. So you have to get your head a little out of an execution screen when you're doing your homework and looking around. And that's why I'm always looking at these ORH and ORL numbers, because that's where all the sell stops are. I mean, they got the sell stops under 28.90 last night, right in a perfect point and figure support and screw you zone. And you couldn't add a better low on the NASDAQ and went right there. So, this is the stuff that you got to put together in your head all the time. Make it part of your daily stuff to know where and that's why I've got my pattern recognition stuff up. I want to know where the daily, the weekly, the monthly, the quarterly stops are both ways. And that helps me because I know that if they sustain above 34.25, they're good. If they go up there, they get the stops and they roll right back over, you don't want to be long. So that tells you directionally what the market's going to do at those levels, at those ORH and ORL levels. They'll tell you if it's real or it's just a stop run and it's going to come right back, or it's real. And the beauty of those levels is that, one, that's where all the orders are. So the algos want to take the market there. But two, as being a little bit more strategic and thoughtful of a trader and getting your head out of a 5-minute chart, you can look at it from a more circumspect view, because that's where the rubber's going to meet the road. And it's either you're looking for major price rejection at those levels or follow through. It tells you how the market's trading. Okay, guys? Anything else? Just remember, you always ask. Okay, well, I'll end this one. We've been going a little over an hour. And, it's a lot for a lot of people to take in. So the more time you go over the first two, and then this one's the third in the series, the more questions you ask, the more it'll sink in. Remember, a lot of this is, this is empirical stuff because, I've been following it for 45 years. Ira's been following it for 40 plus years. And a lot of it, all the equity bond spreads, all that stuff, he was the one who thought all that stuff up, nobody else. This was his thing, okay? And a lot of it makes macro sense, and empirically, the more you see it work, the more you believe it. So Andrew, what are you asking here? Unmute yourself and specifically ask what you're asking.
Hi, Judd. Sorry, my internet just cut out. Did you ask me a question?
Well, you're asking a question here about the ORH and ORL level. You can see it last night. It's always the previous bar, okay? So
is it the low of the previous bar or the close of the previous bar?
The low or the high of the previous bar.
Okay, great. Thanks.
That's all you're looking at, the low or the high of the previous bar. So last night they went and got all the stops below the low, right to the matrix level, right? And once it started coming back above that low, the market ripped, okay? And then we opened up. You had an opening range trade today. Basically opened up where it closed yesterday and started up, and where the stops were. They were at 34.25. Well, Matt, took a bunch of his longs off at 44. Well, why not 44? Because it's on the sheet and you don't have to overthink it. You know what the big macro level is. It's on the bloody sheet. He just put the order in. You don't have to monkey around. You know that 44 to 51.25 is going to be a lousy zone. Can this thing go up and go to 64.5? Yeah, why not? But you have to trade the market one level at a time and trade the number sets in front of you. So if this is really good, it's going up here to retest that breakdown level from the first of the month. And if it doesn't, that tells you that this is a rally to nowhere, going to roll back over again. So if we start getting back under 34.25, then it'll be weak again. It's as simple as that. All right, you guys with me on that? And it doesn't matter if it's a daily, a weekly, a monthly, a quarterly, they always try to come back and revisit those levels. All right, guys, that's it. All right. Then thanks for attending. I hope I answered your questions. And I'm gonna stop the recording and I'll exit out. And I'll send invitations to the